Hello, welcome to my channel, The Day Tradestor. This is a channel where I hope to inspire people who are not in the markets and do not have a retirement account that they actually do open a retirement account. It is also intended to help people who are new to investing and trading, who are unfortunately unprofitable or lack the appropriate skills to day trade, or who simply just do not know much about swing trading. I record what I do every trading day, except yesterday. I did not record any videos yesterday. I was trading. I was trying to get my camera set. I recently purchased an OBSBot camera, and I want to get that ready for streaming my actual day trades, but also to put my face on these videos. The YouTube algorithm and YouTube says that viewers and consumers of videos like to have a face on the video more than faceless. So if that's what it takes to reach more people and to possibly have you out there recommend and share my videos with other people who either do not have a retirement account or who are not profitable or who are afraid to make trades because they just aren't knowledgeable and they're not comfortable with their skill sets, then if I have to put my ugly mug up here, then that's what I'll do. So if you were waiting for a video yesterday, I am sorry. I apologize for that. I do not multitask very well, so I had to focus my energies on the camera and cleaning and straightening up my office because I don't want to use one of those fake backgrounds. Anyways, let's get to today's S&P 500. Well, if you're in the markets, you know yesterday was a pretty small, bloody day yesterday. As long as you didn't sell, hopefully you didn't sell at a loss, then your portfolio most likely went down, just like mine did. So if we get a closer look, if we look at the close of yesterday's candle right around 67.70 and the close of the candle day before, roughly we'll just round it to 68.50, we're looking at an $80 move down. And most of that was the downturn of the tech stocks. The tech stocks right now are Mag 7 or the top 10 are roughly 46 or 47% of the overall S&P 500. But we got a pretty green candle today. We did open a little bit lower than yesterday's close, but right now we are looking at more than a $50 gain. So the market's more than half up. So if you sold anything at a loss, I wish you hadn't. If you've been watching my videos, you'll know that I do not. I try not to sell anything at a loss. So I'm hoping that you take some of that information and you incorporate that into your strategy as well, and you look and realize that your money is valuable, that your money is too expensive just to sell at a loss. As I said, I'm not a day trader that practices day trading the way the experts say to do it. And I really and truly hope that you do not try to be that type of day trader. If you are trying to be that type of day trader, good luck. If we take a look at the S&P 500, this is a 3-month chart. If you're new to the videos or you're new to trading, this is the Thinkorswim platform. For those of you who have watched my videos, if you're interested, you can just fast forward to the sell stock chapter, because my goal is to reach new traders. So I tend to repeat quite a bit of the same thing on each opening at the start of my videos. At any rate, this is a Thinkorswim platform. This is a 3-month chart, which means that each candle that we see here, green or red, each candle aggregates, means that it's one entire day of price action, whether it's up or down or both directions. So we can clearly see when we've had an up day and we can clearly see when we've had a down day. We can also clearly see when we have a good up day and then the next day price opens higher than the previous day's close. We can see a gap here. We can also see tails on candles that do actually have tails or wicks. The lowest point of the wick is the lowest point of the day. The highest point of the wick is the highest point of the day. And then we have the body. Now, my strategy, what I'm trying to hopefully that people take to heart, is to try not to follow the fake gurus and get swept up into the idea of getting rich quick. I started 3 years ago, and that was not how I entered the markets. I knew that over time, the stock market can change my life, and it can also change yours if you respect the markets. I personally, for my strategy, I start out as an investor, and the investments that I purchase are large cap stocks, where 3/4 of them are in the S&P 500. The other quarter of the stocks are either small or mid cap stocks that by many of the experts are expected to be the next big stocks in the next 5 or 10 years. And out of those stocks, if we look over, this is the watch list. This is all the stocks that I currently own and have positions in. This is the watch list, which I have a base of over 200 stocks that I purchase stocks from. Again, I'm acting primarily as an investor to capture, you see this run? This is a 3-month run. So any stock that I bought down here, which I actually would have bought much sooner because this is only 3 months ago, and this run started actually a little over 5 months ago. So anything that I bought 5 months ago, I've been on a nice long 4-month run with some stocks, 5-month run with some stocks, 6 months run with some stocks. And since most of the stocks I own are part of the S&P 500, it sort of matches the S&P 500 movement. So if you're new to trading or you're new to my channel, I am just here showing you what I do every day. Again, except for yesterday, which is very rare for me to miss a day. Because if me, can be profitable, and I'm just somebody who has a pretty decent head on my shoulders, I certainly couldn't go on any game show on TV and expect to win. I probably couldn't beat most people in a trivia contest or a Jeopardy game. But I'm making money, and if I can make money just doing a simple, what I call safe strategy, then I know other people could, and that's why I make my videos, because I want you to be profitable as well. And if you can be profitable from watching my simple strategy, taking some of this and making it into your own strategy, or copying my trades exactly, if you're able to afford the stocks that I purchase, maybe you can't afford all the stocks that I purchase right now, you might at least be able to purchase 1 or 2 of the stocks that I trade on a daily basis, depending on how the swing trades move. But if you're profitable, then you might reach out to your family and friends and coworkers who don't have a retirement account and say, hey, you got to check out the day Tradestor. The dude's all right. If it wasn't for him, if it wasn't for the day Tradestor, I either wouldn't be in the markets, or I wouldn't even be profitable, or I would have given up by now. But I found his video and I'm in it. All right, so that's enough of me flapping my gums. It's now to start actually trading. If you do have any questions about anything that I show and you need more explanation, please leave a comment. The videos I'm making now are just primarily of my my trading activity. I eventually will have other videos that explain a lot with greater detail about the Thinkorswim platform through Charles Schwab that I use, the moving averages, the crossovers, what these boxes are, but that's not going to happen anytime soon. I spend all day, every trading day, even yesterday, in front of this monitor trading. From 7 o'clock to 4 o'clock, I'm right here, Eastern Standard Time, because this is what I do for a living. The videos I'm showing you are my swing trading strategy. But I also day trade, and I'm not promoting day trade. I'm not going to show you what I do on my day trades. I do not want you to day trade. I want you to enter the markets with safety and security. And I want you and everybody around you to become rich over time, not a get rich quick by day trading. Day trading is an entirely different beast. At any rate, the first thing we need to do, I need to sell some stocks. This morning I had the longest list of possible sell alerts that I've had all year. The list is over 30 long. Now, when I created my list this morning from my possible sell alerts, there were certainly stocks that I was actually possibly going to be selling at a profit. But now that we've had the S&P 500 is moving up, that might have rendered those situations moot. And we'll see if they're moot together. So the first stock I'm going to take a look at that looked like a possible sell was CrowdStrike, CRWD. CrowdStrike is an online security company. You can see they've had a pretty much nice run since September, around September 10th, September 11th and 12th. I'm going to zoom into CrowdStrike, take a look at our candles. So what happened yesterday? We had price move down below the fast moving average, and it closed, and we have a continuation of that move down. Continuation is that this candle, the price currently is lower than the close of this candle. And whenever that happens, I look to sell one of the books that I have. Now, I currently have 4 shares, and for CrowdStrike, I have 1 share for each book. For those of you who are seeing my videos for the first time, I calculate how many stocks that I would like to purchase of any company. The minimum that I will purchase of any company is 4 shares. just like I've got here with CrowdStrike. And when I purchase only 4 shares, each one becomes a book. Price pretty much dictates how many shares or how many books I will have. I would like to have 4 books at all times, at least when I buy into a stock. But if I don't have enough money, then I'll just buy 1 book or 2 books, however much I can actually afford for that particular stock. Now, I am giving a little bit more in detail than I normally give because I had something exciting happen today. I woke up this morning and I had 90 views on my video from Monday. I currently have 95, and for me that is super exciting. So it's quite possible that some people found my videos and they were a little lost. So I am spending a little bit more time giving a little bit more information on how I trade and what the specifics are, because I don't give that in every video. So bear with me for a few more moments, or just fast forward a minute or two and we'll be back on track. So in reference to books, as I was saying, I like to, when I can, max out on the amount of books I have, which is 4. And for basically almost any stock that's over $100, it's very likely that I'll just have 4 shares of those. I do have some that are over 100 that I have 8 shares or I have 16 shares. And the reason I would either have 8 or 16 is that whenever I want to increase the amount of shares, I have to make sure that that number is divisible by 4. That way I can have an equal number of shares in each book. I don't want one book with 1 share and one book with 6 shares and one book with 2 shares. I want all the books to have the equal amount of shares. So every time I increase beyond 4, it's a multiple of 4. All right, back to selling. So right now I'm looking to sell 1 book because each time price crosses below either the fast moving average or the slow moving average, that is a possible trigger for me to sell 1 of the books that I have for that stock, for that company. CrowdStrike is currently priced at $530.49, and I will be selling 1 at a profit. So let's go down here. This is my active trader. If you are new to trading, you do not need a Thinkorswim platform. You could follow me and you can trade in your whatever current platform you have, TradingView, Robinhood, excuse me, Interactive Brokers, whatever it is. Learning charts can be confusing, and that's another reason why I make my videos, so you don't actually need to try to learn how to read the charts as you are becoming a new investor or a new swing trader. All of this information can be quite overwhelming. So I'm coming over to my active trader and I'm going to just drop down to $5.30.30, looking to sell 1. Now I sold that at $5.30.30 and I bought my highest priced stock, but still less than the current price, is $514.47. So we're just going to round that to $16 in gains on that sale. Next one on the list is Cisco Systems. With Cisco Systems, that's been on a nice run. So if you've been following my videos since before September 30th and you bought one either at the cross, when it crossed, I actually didn't have enough money to afford to buy in, but I was able to buy in about a week and a half after the initial cross. But if you bought back here, or even when I did, then you are certainly looking at a little bit of a profit that we'll be selling today, hopefully. So maybe I shouldn't sell this one book, but by having a set of rules that tell you when to buy and when to sell, as long as you have a pretty good sound basis for that rule set, you want to try to stick to it as best as you can, and that is what I'm doing here, regardless that this is a green candle. I do not care that it is going up, and it may go up the rest of the day. It did come down a bit at some point during the day, but the main body of the candle is pretty, well, we just saw it drop a bit, but we do have a body of the candle that is significantly higher than the lowest point, and it's still higher than the open. So what I'm hoping that you learn from my videos is that you want to be patient and you want to have a rule set and you want to try to stick to those rules. If you let emotions take over, you're probably going to not fare very well. Next on the stock is GE, General Electric. If you're in the markets, just like Dell, you know who GE is. Now take a look at this candle. Part of the candle closed below the fast moving average. I do not count this as a triggering candle. In order to be a triggering candle, either below the fast moving average or the slow moving average, or the opposite direction, it's got to be, if it's on the upside, it has to be completely either up or down below both average lines in order for it to be considered a closing candle or a triggering candle. So this candle was actually the triggering candle. We have a full candle. We have the entire close down below the fast moving average. Yesterday, we had a continuation with price being significantly lower than the close of the previous day's candle. But I have two things that I need to wanted to show you here. I do not have a sell order on here. Here's what a sell order would look like on any particular day. We have the bubble and we have the arrow dropping down. I do not have that here, so I either missed this one as well, or when I didn't make my videos yesterday. Sometimes when I'm making the videos, if I don't sell, the price might have actually been higher than the previous day's close. And that happens sometimes. When I'm making the video, sometimes price is higher than the close, but then it drops down for the rest of the day. But that didn't happen here. I just missed this completely because I didn't make my video yesterday. So with this, we're looking to sell one book because we had price drop down below and close below the fast moving average. With GE, I max out with one share for each book. So I currently have 4 shares. So just going to come in here, click one. Current price is 307. Let me see. That is higher than my purchase prices. So we're just going to sell one now at 307.28, maybe. And the $307.28 sale, I bought at 303. So that's a $4 gain. General Motors is next. Let's take a look at that. General Motors. All right, with GM, I currently have, let's zoom back in. So I currently have 12 shares. I'm maxed out. That's 3 shares for each book. 2 days ago, we had price move down below the fast moving average and close. So that was a triggering candle. Yesterday morning, received an alert that I didn't do anything with. I didn't realize I missed so many opportunities to sell. In this particular case, I am glad that I missed that opportunity because today's candle, we're moving right back up and we are significantly higher. Significantly higher, of course, being relative to the particular stock in question than both yesterday's close and yesterday's open. So I will be just passing on the sell. I will not be doing the sell order because we have a completely different change of direction than the previous 2 days. Sometimes it pays, like, let me start over. Sometimes it pays to miss a day, like today, but in most cases, it usually works against me. I got lucky today with this one. Going to take a look at Intel instead, INTC. They are now a semiconductor company. They will be making chips for NVIDIA, AMD. And for Intel, I'm currently maxed out at 24 shares, which is 6 shares for each book. Zooming in a little bit more and taking a closer look at Monday's candle, we clearly had a price move down and close below the fast moving average. And yesterday, not only do we have a continuing candle for this particular move and cross, it also crossed below the slow moving average and closed. So yesterday I should have sold one book for this particular cross. I would not have sold in the second book because this is the crossing candle. That is not the continuing candle. It is not the confirmation candle. I always look for confirmation of the move. This candle is confirming this move down in this cross. However, today's candle is not confirming this move and the cross below the slow moving average because we have a green candle. But not only that, more importantly, price is currently above the closing price of yesterday. So now I'm in an emotional quandary. The rule says yesterday I should have sold one book because we have a confirming candle on this cross. However, today's candle, it is higher than yesterday's candle. So I'm just going to go ahead and sell one book based on this crossing, or this confirming candle of this cross. And tomorrow, if price moves back up and crosses this line, then I might buy back in tomorrow, but at least it'll be a small loss of gain. But we'll go ahead and stick to the rule that I should have done yesterday. Again, I have 6 shares per book with Intel. So we're going to be selling 6 and we'll try 38.09. We'll just sell market. $38.14, and I bought Intel at $24.41. So we're just going to round them each down. That's a $14 gain per share times 6, so that's $84 of gains. So if I take a look at Intel, let's see how far back. So if you're following my videos and you happen to buy in back here at the cross, that is a day trading stock. That's Micron. I also do a day trading strategy, as I said earlier in the video, and I do that all day long. Then you're doing all right. You did a pretty good job on this move. And the reason this is the main reason I show a swing trading strategy, because we're not looking to trade in this strategy every day, every single stock. We're not day traders in this particular strategy. What I'm trying to teach you and show you is if you choose to follow my basic quote unquote safe strategy, that over the long haul of buying large cap stocks and following the trend, that's what this is. So swing trading strategy is a trend following strategy, and it's a momentum strategy as well. And the momentum of Intel from August 18th took it from $22 to $38. So we're looking at a 2.5 month move. So it is quite possible that if you follow my videos and you miss a day or two, when I make a trade and you catch it on a video a day later, 2 days later, sometimes even a week later, if you choose to follow my trades, if you choose to try to copy what I've purchased and sold, but in this case purchased, you could sell anywhere around this area. Buy anywhere around this area, or here, and still be profitable. What I'm looking for in this strategy is a trade that either crosses up or it crosses down, and that move continues on for not just days, but weeks, and just like this case, for months. And with the swing trading strategy, since I'm doing this all day, I know that the overwhelming majority of you can't do this all day. You don't have time to come home, open up your charts after work, and try to find a stock that you could buy and sell, look at all the charts, find all your triggers and your alerts, see what would be the best opportunity. You just don't have time for that. But you do have time to possibly come home. If you want to look at my videos, maybe possibly, again, it would be a copy of my trade. It is not a recommendation. I'm showing you as new traders and new to the industry what I do to make it a little bit easier on you. But you can come in, you can just pop on the video, you can go into your brokerage account and you can copy the trades if you like. But if you do that, just know that you are taking that trade at your own risk. You know that the markets are volatile. You accept that responsibility and you acknowledge that nothing that I show you here is a recommendation. I'm showing you what I do. You're more than welcome to follow me, but it is at the responsibility of yourself. I need to stop flapping my gums so much and try to get through this list, so I'm going to move a little bit more quickly and stop giving a little bit more explanations. If you're missing anything, you can reach out with a comment, or you can look at some other videos, or you can wait till the videos tomorrow and later this week and on into next week to more completely understand and take in my strategy. So the next one we're looking at is Lam Research, LRCX. Lam Research, you can see, nice long run. So we had a triggering candle yesterday, crossed down and closed below the fast moving average, but we do not have a continuation of that move. Quite the opposite. We have a nice, big, beautiful green candle. This might even be the largest green candle. Maybe not. We've got one here. And yep. So it's the second largest green candle in 3 months. Again, this is a 3-month chart. So not doing anything with Lam Research. Cross that off the list, and we're looking at Monolithic Power, which is MPWR. With Monolithic Power, I currently have 3 shares, which is 3 books. 1 share for each book. Let's zoom in here. We're looking at price moved down and closed below the slow moving average on Monday. We clearly had a continuation of that move for Monolithic Power. Should have sold something here yesterday, or at least put it in a sell order, and it would have been going, no, I would have been able to sell 1 out of profit yesterday. But we clearly have an opposite move today. So I am going to use this yesterday's move and look to sell 1 book. Looking to sell at $1,007. And from that $1,007 sale, I bought that at $942. So that is $65 in gains. Micron is our next one, MU. Look at that move. If you've been in Micron, if you've been watching my videos, or even if you just did it on your own and you caught in early, that's another nice big move. Again, this is why I want to show a nice safe swing trading strategy. And we're using the word safe in air quotes. Remember, the reason I'm calling it safe is because the majority of stocks that I'm purchasing in this strategy are large cap. They're part of the S&P 500. Meaning that if there is a downturn, however long the downturn is, it's very likely that it's going to eventually turn around and be profitable. So zooming in, we've got, I don't even need to zoom in. We've got 1 candle. That was the triggering candle. The candle today, which should have been which was a potential confirming candle with the down move, is going the opposite direction. So we're looking at Palo Alto, which is PANW, P-A-N-W, another online security company for online services. Here you can see we've got 3 red candles here, so we're going to zoom in. And we have yesterday's candle was the crossing candle. It crossed down and closed below the fast moving average. We do have a continuation of that move. Price of today's candle is currently lower than yesterday's close. Current price is at $213, and I currently have 4 shares, and with Palo Alto, I have 2 shares for each book, so I only have 2 books. Looking to sell 1 book for this cross. I'm going to raise this up to 2 shares, and we're putting that at $213 and 2 cents. And I bought that at $208.51, so we're just going to round that to $5 in gains for that sale. Next stock is Palantir, PLTR. They also have had a pretty decent move over the last, definitely over the last several years. They've had an amazing, immense move. For those of you, if you are checking out my videos and you've been doing this for years and you got into Palantir and you got in early, good for you. So currently, yesterday's candle, we dropped down below the fast-moving average and closed. That was a triggering candle. We received the alert this morning, and we are in a continuation of this downward move. So I'm looking to sell 1 book because we have this cross. It's just 1 cross of the fast-moving average. I currently have 32 shares, which each share is 8. Each book is 8 shares for each book. So I'm maxed out on my books. So I'm looking to sell 8 at $188.58. Let's take a look. Unfortunately, I will not be able to sell anything at a profit. When I have a cross down, just like when I have a cross up, I like to max out and purchase all of the available books that I could. And when I have a cross down, I look to sell everything that I have and sell for a profit. Unfortunately, when I bought back in here, I bought in pretty high after this cross. It wasn't here long. They had a nice move up to $207. So roughly a $20 gain from the cross. However, I am currently not in a situation to sell. So when I can't sell, I have to place a sell order. So I come to my watch list. I find Palantir. I right click, pull up the sell order list. And with Palantir, as I said, I like to have 8 shares, so we're going to move this up to 8. And with Palantir, with what I'm looking to sell, I bought at $188.99. So my sell orders, I go to the first digit, which is in the hundreds place. So 10% of 100 is 10. I add 10 cents to my sell order, making it $189.09. 189 and 9 cents. And that is what I do for every sell order. It's just, I find out what 10% is of the first digit and I add that in cents to the overall purchase price. And that becomes my sell order. And there's my sell order sitting right there for Palantir. QQQ is the next stock or ETF. This is an ETF indexed to the NASDAQ 100. NASDAQ 100 is the top 100 non-financial stocks. They're not comprised of all just U.S. companies. There are other foreign companies in the NASDAQ. One thing about the QQQ over 15, 20, anything over 20 years, if you're going to actually just be an investor and dollar cost average in, it's possible you could just put your money into the triple Qs and don't do anything else. If you don't believe me, go ahead and look up some comparison charts of the QQQ to any ETF and any fund, and it far outperforms any other ETF or any other fund. Any funds that are close, it's most likely that they themselves are in the QQQ or they're heavily invested in the stocks that are in the NASDAQ, in the NASDAQ 100 as well. I currently have 4 shares, so I'm maxed out at 1 share for each book. Yesterday, we had a candle crossing below and closing below the fast moving average. I'm sorry. If you're new to my videos, I tend to make some mistakes while I'm recording because I have almost 100 charts that I'm looking at for my day trading as well. I'm not completely focused on this. I am multitasking and I do make some small mistakes. Sorry about that. So I have yesterday's candle, which moved down and closed below the fast moving average. However, the continuing candle is not confirming this move. We have the opposite move. So I'm ignoring QQQ. But going back to what I said about the triple Qs, the NASDAQ 100, if you are just going to be an investor and you're not going to do anything with the money and it can sit there for 15, 20, 30 years, definitely take a look at how well the triple Qs perform over time. There literally is no other ETF that I think, I might be wrong, there might be one that outcompetes the QQQ. And my videos are for people, I would love, if you're an investor, great, awesome. Just be a hardcore investor and dollar cost average in. However, many people don't want to be. Trying to look at the next stock, which is Shopify. They also want to trade. So to cover that, I make these videos. I also want to trade every day. I want to maximize my earnings potential. And I feel like I can do it safely with the strategy that I have. Shopify is the next one, SHOP. All right, with Shopify, we did not have a true close. The entire candle did not close below the fast moving average. Yesterday's candle fell through both the fast moving averages and the slow moving average and closed. However, we do not have continuation of that move. So we are disregarding both crosses. If you're new to my videos, when I have a candle cross both below the fast moving average and the slow moving average and closes below both in one day, if I have a continuing candle, I only sell one book. I do not sell out of both. And the reason is because very, very, very often when there is a long down day, the next day is usually, typically, in many cases, a reversal of this particular move, which is what we have today. For example, this candle fell down and closed below both averages, but the next day we had an update, even though it was a red candle, so this was not a continuing candle. And depending on when I made the video, you can see when I actually made the video on this particular day for Shopify, price was below the closing candle, or the price of the closing candle 2 days prior. So this became the continuing candle, confirming a downward move. Unfortunately, at some point during the day, it rose back up. So again, I only sell one book at a time when price crosses below the fast moving average and the slow moving average and closes. If this had been a continuing candle with price moving down, I would have sold this book. And tomorrow, if price further continues down, I would be selling this book. So nothing is happening with Shopify. Moving on to SMH, which is an ETF for the semiconductor stocks like NVIDIA, AMD, and many, many more. This might be a repeat. I can't remember. I keep day trading. So this number 7, I have made an accidental sale or an accidental purchase of just 1 share. I should always have an even number of shares. That's my goal at least. But for SMH, I max out at 8 shares, and that's 2 shares for each book. We had yesterday price move down and close below the slow moving average. We do not have confirmation of that move. So I'm moving on to Snowflake, which is SNOW. Snowflake, we have the fast moving, we have price moved down and closed below the fast moving average yesterday, but we do not have a confirming candle. Price is currently higher than yesterday's close. So now moving on to Twilio, TWLO. So Twilio, if you're new to the markets, we had earnings last week, and they had a nice, beautiful earnings. They went from 112 all the way up to 126. So we're looking at a $14 gain overnight from a good earnings report and a good forecast. I did not receive an alert due to a cross. What I do is every day I go through my list, seeing what stocks have moved and what they've done. And I have to keep an eye out for when we have earnings. So for stocks that go to earnings and make a big move, if we were to be in a downward trend, I would want to sell before, possibly sell before we actually have a cross, because I want to capitalize on many of the earnings, on as much of the earnings as I can. And when I looked at my list this morning, we had a red candle here. Price was down here somewhere, but you can see price has changed direction. Now with Twilio, I currently have 6 shares, which is 3 books, 2 shares each. So right now, because we have this green candle, we don't have continuation of this move. I'm going to ignore Twilio as well, and we'll just keep an eye on that as the days and weeks progress. Now, it looks like the last one on the list that we actually had an opportunity to possibly sell as an ETF, XTL, and that is for telecommunications. We are in a similar situation. Hope it didn't go through. We're still on the Twilio chart. That looks better. So here we have another example. We had price move all the way down below our fast moving average and the slow moving average and closed yesterday, but we do not have continuation of either one of these, and it wouldn't technically be either. It'd just be continuation of the cross below the fast moving average. So we have we've gained back more than half of the move down. So there were a few that were on the list that we didn't have to sell because it's been a nice, beautiful green bull day. Now, I do have some that are on the list that at the time we absolutely were going to be placing sell orders. So I'm going to take a look at 3 of the stocks that I have to put sell orders on. And if each one of these I do indeed need to put a sell order on these, those will be the only sell orders that I do on video. The reason is I don't need the video to be any longer than it has to be. I've done a little bit of rambling today, so it is a pretty long video. But once you grasp how I take 10% of the total first digit in whatever place that's in, and cents, just add that to my purchase price, it gets pretty easy. It's the same process no matter which stock that I'm placing a sell order on, no matter the value of the stock. So the first one I'm looking at is AMD. So we have no sell order. You can see we had price move down and close below the fast moving average with a continuation. So when I looked this morning, price was substantially lower. So it's quite possible that we're going to hopefully, possibly, it would be amazing if I don't have to put any sell orders on. AMZN, which is Amazon. So Amazon, we do not have a cross over the fast moving average. We have, similar to what we had with Twilio, is we had earnings the other day and we had a beautiful gap up with AMD. They gapped up again the following day, but then they went down yesterday, and the bulls are putting some pressure on the bears, and it looks like the bulls may be close to winning out and overpowering the bears to continue AMD's move up. But we've got a green candle. Whoops, sorry about that. We've got a green candle pushing it back up, so not going to do anything. We're going to leave that alone. So basically, if we have any green candles, it's likely that we won't be placing any sell orders on those particular stocks. Next one is Aristanet, ANET. This one we will definitely be putting a sell order on. With Aristanet, I currently have 8 shares. That is 4 shares for each book. And I will be placing a sell order on Aristonet up here. Go into my watch list, right click. We're looking to sell 4 shares, 2, 3, 4. Price is currently $141. I bought Aristonet at $158.23. So the first place digit is a 1. So 10% of 100 is 10. I turned $158.23 into $158.33. $158 and 33 cents. Good to cancel extended hours, confirm and send. So now I have both books sitting in sell orders. ARM is our next one that we're going to take a look at to see if we've got any sell orders to place. We have fast moving average crossed below and closed. The fast moving average 2 days ago. We had a continuation yesterday. So we're looking to place sell orders because right now the price is currently, where is ARM? I bought it in the 170s. We're in the 160s. I currently have 3 shares, so it's 1 share for each book. So I'm going up here looking for ARM, right clicking in my watch list, looking to sell 1. I bought ARM at 171.78, so 10% of 100 is 10. And we're going to turn that into 171.88. Good till cancel extended hours, confirm and send. So there is our sell order for ARM. So we have one more stock that we're going to take a look at. Possibly one more stock. If we place a sell order, then we will stop with our sell side. All right, copper. We had the fast moving average cross down. No, we didn't. It did not cross below the slow moving average. Yesterday's candle gapped down and closed below the slow moving average, but we do not have a continuation of this move. And because we do not have a continuation of this cross below the slow moving average, we're moving on to the next stock, which is Datadog, DDOG. So here we had a gap down and we had a close that went past both the fast moving average and the slow moving average on the same day. Again, when we have a candle go through both on the same day, I'm only looking to sell 1 book today and possibly 1 book tomorrow. Today, we do have a clear continuation of this move down. So I'm looking to sell 1 book for Datadog. I'm maxed out at 4 shares, which is 1 share for each book. So we're looking to sell 1 at possibly 156.45. And the 150, oh, that shouldn't have sold that. That was supposed to be a sell order. Dagnabbit. So I'm looking to buy back in at 156.45 to square everything up. So now we're back to even, bought and sold, nothing lost, nothing gained. And now I'm going to put a sell order, which is not in my active trader. We've got to come over here to my watch list. We're looking to sell 1 share of Datadog that I bought at 161.99. So we go to the first place digit. It's a 1 in the hundreds place. 10% of 100 is 10. So the 161.99 becomes 162.09 cents. So $162.09. Confirm and send. Now we've got our seller. So that's 3 sell orders that I've placed. Hopefully you see how I use my strategy. Of course, you can use your own strategy for placing the price on the sell order. My strategy is, as an investor, I try very hard with diligence not to sell any stock at a loss. Because I'm an investor, I have no problem holding on to stocks as they take a downturn. I hope that you incorporate something similar to this in your strategy, especially if you're new, and especially if you've been trying this for a while and you're unprofitable. You're unprofitable probably because you follow all of the supposed experts who say, set your stop losses, set those stop losses, set a stop loss. Here's where you set a stop loss. Look at the Fibonacci, set a stop loss. For those of you who are trading, how many times do you set a stop loss and then 10 minutes later or less, or sometime later that day, it just goes back up past where your original purchase price was? I found that patience is the key to trading. For the remainder of the sell side stocks that I had to look at and possibly put sell orders on, I'll take a look at those off video. And if I do any activity on them, then they will be in the activities list later in the video. So right now, I want to take a look at our market watch. We're looking right now, we've got a lot of stocks that are moving green, but I'm coming into my calendar and I want to take a look at all the stocks within my account positions. And I only want to look at earnings. And this afternoon, Wednesday, we have quite a few stocks going to earnings. So I've got 1, 2, 3, 4, 5, 6, 7, 8 stocks that are going to earnings this afternoon that I want to try to de-risk. And then tomorrow morning I have, I don't own that. I own BDX 1, 2, 3, 4, 5, 6, 7, 8 come before market. So I have 8 stocks going to earnings tomorrow morning that I wanted to possibly try to de-risk out of. So the first stock I'm going to take a look at is App. Now, when I'm looking at stocks to sell for my earnings, I'm looking to sell up to half of the shares I own, possibly half of the books that I own. If I happen to own 4 books, then I will try to sell 2 of them. If I can't sell them at a profit, I will place a sell order on those that I'm unable to sell at a profit. And the reason I do that, I'm de-risking. I would rather sell half of the shares that I own or some number or 25% and make profits just in case the stock takes a nosedive. Again, I would like to sell shares going into earnings and make a profit on those on the off chance. It's pretty much a 50-50 chance in many cases that the stock goes down. Since I'm a longs investor, I want to sell those stocks before earnings and add that money to my pool, my account balance, so I can purchase stocks that are actually going up, that I know that are going up based on price action. And every time going into earnings, I either want to have 2 books or 1 book going into earnings just in case price goes the direction I would love for it to go. Now, with App, I currently have 3 books, which is 1 share for each. Now, when I have 4 books, I will sell half of those, so that would get me down to 2 books. When I have 3 books, I err on the side of the price going up. So I will only either sell or put a sell order on 1 book and protect 2 other books just in case price goes up. All right, so in the case of App, we've got App Loving going to earnings this afternoon. So I currently have 3 books, so I only want to either sell or have a sell order on 1 of those. So I'm just going to come in here. We did just place 1 sell order, so we're going to cancel 1 of, well, that was 2 of them. I'm sorry, I'm mistaken. We did not mess with App Loving today. Which stock with the A do we had? ARM. I was thinking about ARM, not App Loving. So with App Loving, I max out at 12, which would be 3 shares per book. So I only have 1 book. So I just cancel those the sell order altogether. I'm erring on the side. That price will go my direction and we'll make gains on those 3 shares, that 1 book. Now we are taking a look at ARM, even though we just put a sell order on that earlier in the video. ARM is going to earnings tomorrow. I currently have 3 books, and with ARM, I currently have 3 shares, and that's 1 share for each book. So I err on the side of caution. I want to have 2 books going into earnings, so I will cancel the highest price sell order that I've got. And this is what I do for every single stock going to earnings. I currently have 1 share sitting here in a sell order. So sometimes, even if ultimately the price goes against me and it goes down, sometimes there's a spike up that can capture this sale, meaning that we'll have somewhere at least a 10-cent profit on the sale of this stock. But then if it does continue down, that money is added to my portfolio balance and being able to be used to buy stocks that are going up. CRISPR Technologies is the next one, CRSP. I currently have 6 shares, and with CRISPR I like to have 12, so I currently have half of the books that I would like to own. That is Enva. Everything that you see over here is my day trading sales. I am not able to sell any stocks at a profit. I do have 2 sell orders, so we're going to cancel the highest priced, and that way, if it does, in this case, launch upwards a great deal and capture that before it moves down, then great. It's a small profit and it's money added back into the portfolio balance. Robinhood, HOOD. They are an online brokerage competitor to Charles Schwab. In many cases, they can be considered even better than Charles Schwab. Now, they've got a long way to go to have the same amount of assets under management, but it is largely thanks to Robinhood that me and you and the overwhelming majority of retail traders are now able to actually participate in the stock markets the way we're currently participating. Robinhood changed the industry by having zero trade commissions and creating their app. Their super duper gamified user-friendly app that became popular over COVID. But prior to Robinhood and their disrupting the market, in order to make a trade, it was at least $6.99 for every trade. With Robinhood, there's zero commission trades. If you and I, the regular plebes, the regular average people, the regular Joes out here, had to pay $6.99 for every trade that we made, we still would be so far outside of this industry, outside of the system, we wouldn't even be able to see the house to be able to even look inside and through the window. So thank you, Robinhood, for allowing me and you and everybody else who's watching these videos to at least be given the opportunity to participate in the markets the way we're doing, or at least the way we're trying. At any rate, at Robinhood, I've got 12 shares. I'm currently maxed out with my 4 books. That's 3 shares for each book. So I'm looking to sell or put sell orders on 6 shares. And it looks like it's going to be sell orders because I currently purchased 6 of them at 147 and another 3 at 152. So I'm going to cancel this sell order because we're already up in the $152 range. And I'm looking for Robinhood. And we're looking to place a sell order, and we're looking for 6 shares. And as I said, I purchased the Robinhood at $147.07. So the first place digit is a 1 in the hundreds place. So 10% of 100 is 10. I am adding 10 cents to 147.07 to make it 147.17. 147.17. 6 shares, confirm and send. And there's the sell order. Now the emotional trader in me says, keep all shares. Go into earnings with all 12 because Robinhood is just growing. Because there's millions of us, everyday retail traders sitting at home or at least coming home from work wanting to participate in the markets. We want what the rich have, and Robinhood is definitely benefiting by growth and providing that service to us. I say us, meaning the group of retail traders. I do not have a Robinhood account. I don't like their platform. It's too gamified, and they don't have the charts like this. This Thinkorswim platform is absolutely incredible. But I will pay my respects to Robinhood for giving me and us this opportunity. All right, Joby. Joby is an eVTOL, Joby. Enter. It's an electrical vertical takeoff and landing aircraft. I currently have 11 shares, and with Joby, I believe that's just 1 book, and it is 1 book, so I'm just going to cancel the sell order. McKesson is the next, MCK. McKesson, they have been on a beautiful move up for the last 5 months. I currently have 3 shares. That's 1 share for each book, so I'm looking to sell 1 because I want to keep 2 shares, again, in case earnings goes our way. So I'm looking to sell 1 share, and it looks like it's going to be the one that I bought earlier for day trading. We're looking to sell 1 at, where did price go? At 149, because I bought it at 145 if it goes. It did not go, so we're just going to hit sell market. Sold that at 149.50, so we're just going to round that down. So that's a $4 gain. And that takes care of all the stocks going to earnings this afternoon. Moving on over into the stocks that's going to earnings tomorrow morning is BDX. BDX. I currently have 2 shares. We're sitting here and already sitting in a sell order. So we're just canceling that and moving on to Celsius. Cancel that. CELH. All right, there's that. For Celsius, I currently have 20 shares, and that's 4 books, each book having 5 shares. We currently have all 20 shares sitting in sell orders, so I'm going to cancel the most expensive one here and go into this grouping and cancel the most expensive one here as well. Again, that is so in case, didn't mean to do that, in case price spikes up before it goes down. Which, if you have been trading or investing long enough and looking at the charts, you can see that that happens quite frequently at earnings. Earnings is very volatile. ConocoPhillips, COP. Currently have 4 shares. I max out with ConocoPhillips at 4 shares, so that's 1 share for each book. So we're looking to cancel 2 sell orders. So we're going to cancel the 3 here at 106.08, and we're looking for ConocoPhillips. I'm going to put a sell order for 1. We're looking to sell. Right click in there, and we're looking to sell 1 share. And the ConocoPhillips that I sold, I bought at 105.78. So if we're looking at the first place digit, which is a 1 in the hundreds place, 10% of 100 is 10. So I'm adding 10 cents to 105.78 and making it 105.88. So 105.88. And that takes care of my ConocoPhillips. Datadog, and that's one we just put a sell order on earlier as well. Datadog, currently have 4 shares. We already have 2 sitting in. I just need to make sure that they are the least expensive shares. This is not. I'm going to cancel that, and I'm going to put 1 more order in at the same price as this, $162.09. So Datadog, sell 1 share at 162.09. 162.09. There, we're covered for Datadog. Next is NRG. That's a liquefied natural gas company. NRG, I currently have 12 shares. I am maxed out. That's 3 shares for each book. So I'm looking to hopefully sell 6 shares at a profit. And I will be selling 6 shares. So we're canceling this one. And we're looking for 6 shares at $174.95, and I was in the $173 range when I bought these 6 shares. So we're just going to round that up to $1. That's $6 in gains. So I de-risked my NRG stocks by selling half of the shares, and I've got half of the shares just in case it goes the direction I want it to go. Next is Tapestry, TPR. That's a luxury goods company. They own quite a few brands. I currently own 2 shares, and for Tapestry, that is 2 books. 1 share for each book. So I'm just going to cancel one of these sell orders, and that's it. We're going to cancel the higher of the 2, cancel the 116, and that's it for Tapestry. Next is Vistra, VST. I believe that is a energy company, and their main purpose is to provide electricity. They're an electricity provider. I currently have 4 shares. All 4 shares are sitting in a sell order, so we're going to cancel the highest. And again, come in here, and we're going to cancel which 2 are the highest. So we're looking just to cancel 1, and we've got 2 shares sitting in the sell order and 2 shares not. The last one we're going to take a look at is Walker Dunlap, WD. And we've got 4 shares. I'm maxed out with 1 share for each book, I believe. No, for Walker Dunlap, I have 2 shares for each book. So I currently have 2 books. I'm looking to cancel 1 book of 2 shares. So come in here, and we're going to cancel the higher of the 2, and we're done with Walker Dunlap. All right, that is it. That's everything on the sell side. That's everything on the from selling stocks for profit, putting on selling orders, and making sure that we de-risk right before our earnings. So now it's time to move on to the buy side finally. If you're still hanging in there, it's been an hour and 1 minute now. I've done a little bit of rambling, a little bit of education, and some trading. And if you're still hanging in there, that means you are serious about learning how to trade, learning how to be a safer trader, so you yourself can be profitable as well. And I thank you for that. Now, today's buy alerts nowhere near as long as the sell alerts. I've got 1, 2, 3, 4, 5, 6 buy alerts to take a look at. And the first one is Edwards Life Sciences, EW. It's right on the tip of my tongue there. So right now I currently have 4 shares of Edwards Life Sciences, and I max out at 8, so it's 2 shares for each book. All right, so looking at Edwards, we've just been going sideways since October 28th. We're not going anywhere, and that's even after having an earnings. And the earnings was, they were expected to have roughly 60-cent earnings per share. They're at 67. They must not have had a great forecast for the remainder of the year or going into next year. And that's why they've not really gone anywhere. They've just gone sideways. So the alert that we actually received that yesterday. But like I said, I didn't do a lot yesterday with buying and selling, apparently. I know I did a little bit, as we can see them here on yesterday's trade. However, the trigger is from Monday. The trigger is from Monday because we had price move down and trigger as it crossed the fast-moving average, but we did not have continuation of that. So we're not doing anything with Edwards Life Sciences. And now we're looking at Leidos, LDOS. And Leidos, we recently have a fast-moving average crossing above the slow-moving average, which in itself is a good sign, but we also had it occurring on earnings. And the earnings statement here, we're looking at, they estimated $2.61 earnings per share, and it was actually a surprise at $3.05 per share. That's a huge jump. That's a big, big jump. I currently have no shares, and for Leidos, I like to have 4 when I max out. And I like to make sure I max out when I believe that this is a good opportunity to buy in. So I'm going to look at the 3-month chart. They've been going up. Leidos provides engineering services to security and health services industries. And I understated, they are affiliated with national security, not just security. So they are an important company. So it is a great opportunity to buy in. So I'm going to be purchasing 4 shares, drop this down to 4. And we're maxing out at 196.98 with 4 shares. All right. So our next one that we're going to take a look at. All right. If you're new to my videos, I day trade as well. You've heard me say that a few times in the video. And when I buy a stock for the first time and I don't have any previous shares, or if I buy a stock and it's significantly lower than the shares I already own, that stock immediately becomes part of my day trading stocks that I need to look at. So I just added it to my chart, and the chart is actually going down. So it's already dropped roughly 15 cents from my purchase price, so I had to set a sell order. That is what this is. Next stock I'm looking at. Remember, I'm not teaching you day trading. I want to show you my strategy on swing trading and investing. Looking at John Deere, that is DE. Learning a quote-unquote safe way to invest and day trade is a primary objective that I'm hoping that you take away from this. For those of you who jumped right into day trading and you're unprofitable, that's why. You've got to learn some basic concepts, and the most basic is how to put your money in, be patient, and let it grow. Which, by the way, is the #1 way that the overwhelming majority of people actually get rich. It's not from day trading. It is definitely from investing. But at any rate, we've got John Deere. John Deere's slowly grinding up. They crossed back here on to October 23rd. We didn't have any money. We didn't have enough money to buy back in. And that as we've gotten money, we always had other stocks to be purchasing, especially as this is going down. I don't want to buy in when we're in a downtrend. but we certainly are in an uptrend. So with John Deere, if I were to max out, I'm looking at 4 shares. That's 1 share for each book. So we're going to look at our 4 and hopefully get that right here at 475.35. Next stock I'm going to take a look at is Eaton, ETN. All right, ETN, they just recently crossed back here on the 29th. Again, didn't have enough money to buy into Eaton as it came up. We also had earnings, and apparently earnings was amazing. So we're just going to buy in fully at Eaton. I like to buy 4 books at 1 share each. I currently have 1 share, so we're going to buy 3 at 389.38, hopefully. And the 389.38 it is. Now, one of my strategies also, whenever I have stocks to buy, I want to try to fully invest. As a investor, I have no problem having all of the money in my portfolio allocated towards stocks that I believe are going to be going up or that are going up. So anytime I sell stocks, I'm looking to buy stocks to get my balance back down as close to zero as I can. Now, I don't use any leverage in the normal sense that other people think about leverage. Instead of using leverage on the front end where you borrow money to buy a stock and hopefully that it goes up, I max out all of my funds as close to zero as possible. And because I'm day trading, when I sell any day trading stocks, that's when I go into margin and I borrow money to purchase stocks that I just sold at a profit when I'm able to buy back in. And that's one thing that I hope that those of you who are trying to trade take away from this as well. Stay away from margin. You do not want to get caught with your pants down on leveraged loans. If you try to copy what Michael Burry, Bill Ackman, and dozens of other famous rich investors, traders, what they do, you're making a huge mistake. For the simple reason, and I'm going to make a very broad statement here, we're not as smart as them. If we were, we wouldn't be on Reddit. We wouldn't be trying to figure out how to day trade. We wouldn't be figuring out how to try to use our little bit of capital to, invest and become rich. We'd already be there as adults or well on our way. So I make no excuses or justifications or whatever you want to do. I'm not as smart as they are. I'm just an average guy. So there's no way I'm going to try to borrow a ton of money from Charles Schwab on a basically bet that for the short term or even the next several months that the market's going to go my direction. Because once it goes against me and it drops big, I don't want to get hit with a margin call. So if you're listening out there and you're a day trader and you use margin, you might want to reconsider all of that. Stay the heck away from it. All right, EQT is our next. EQT is the next one I want to take a look at. We have a cross. We had a cross late yesterday afternoon. This ended up picking it and bringing it all the way across the slow-moving average. So the fast-moving average is on the rise. We got 1, 2, 3, 4, 5 green days in a row for EQT. I currently have no shares, and if I'm in fully with EQT, I would have 16 shares. 16 shares at the current price of $56. I have enough money, so I'm looking to pop up to 16 here and purchase at $56.21. And I'm all in EQT at $56.21. All right, I just had to place a sell order. I purchased EQT, but they are going down, and they went down pretty quickly from the moment I purchased it. All right, another one I'm going to take a look at is Enva, ENVA. They are a health company, I believe. I currently have 1 share. They had a cross back here around October 24th, and they have had a pretty good earnings because you could tell that the price is just slowly grinding up. And when I'm maxed out on Innova, I have 4 shares, so I'm looking to purchase 3 more shares. 127.35. And I got it, so that gets added. I believe it's already part of my day trading strategy. All right, another stock that I want to take a look at is Ross. That takes care of all of the stocks, not Ross, ending on Enva. That was all the stocks on our daily possible buy alerts. I'm now going down a list of past stocks that I had the opportunity to buy due to some alerts, but I just didn't have enough money. And now that we sold some stocks today, I do have the money to buy in. So Ross Stores is one of them. When I max out on Ross Stores, I like to have 4, but I only have 2. So I'm looking to purchase 2 more shares of Ross Stores. And the next one is going to be NBIX. All right, NBIX. Okay, I currently have 1 share. They had a pretty decent earnings back here on October 28th. They've been rising ever since. We're going to cancel this 1 share because I'm going to buy back in when I'm fully in an NBIX. I like to have 4 shares. So we're going to cancel this share. And I'm purchasing 3 shares to bring me to good at 4 shares total. All right, oh, there we go, 153.74. And that's the end of day. It's now 4 o'clock Eastern Standard Time. All right, I'm going to call that a day for now. I've got a little over $2,500 available in the balance, but it's 4 o'clock, and I want to go ahead and show some of the earnings activity. So I'm going to come in here and, look at my setup, and I want to earnings reports on charts this afternoon, and I've got to go into my earnings whispers. I'm looking up to see what time some of these stocks actually go to earnings. Most of them, when they report in the afternoon, they are typically around 5 minutes after 4. It's now 1 minute after 4, but I know I've got 1, 2, 3, 4, 5, 6. I have 6 going into earnings, so I'm going to move this over here. Boop, and going to put in. I've got APP. For App Loving, I've got ARM going to earnings, got CRISPR, CRSP, and I want this to look like the other charts. And there's CRISPR. I want Hood for Robinhood, HOOD. I also have Joby, JOBY, and I've got McKesson, MCK, all going to earnings, and I want this to look like the other charts. And so Robinhood is going at 5 minutes after 4. AppLovin is 5 minutes after 4. Don't own QCOM. ARM is going at 5 minutes after 4. Joby is going at 5 minutes after 4. So basically almost all of them are going at 5 minutes after 4. So I've got 2 more minutes. I'm going to go off. Well, we've got ARM is already moving. That might be a pre-move before they actually release. But I'm going to pause the video here, and I will be back momentarily. Seconds for you. 2 minutes for me. Okay, we've got less than a minute. ARM already triggered one of the sell orders, if not both of the sell orders. I'm not exactly sure exactly how many sell orders. I can't remember. That's why I am just now working on my wealth gains. As an older man, I'm not that my memory is a little questionable. So I can't remember exactly what we did with ARM, but if you keep an eye on, if you've got a favorite stock here out of AppLovin, ARM, CRISPR, McKesson, Joby, or Robinhood, keep an eye on that stock. If you can't focus, if you have to focus on one of them, pick whichever one, and we should be less than 15 seconds until we see some volatile activity, as all of these are registered to go to earnings at 5 minutes after 4. You see AppLovin jump from 621 to 650 almost. That's the only one that's actually moving. Hood is had a volatile move down, and then came back up, went from 143 down to 136. So the biggest move so far is AppLovin. So we're waiting to see what the rest do. They're kind of sleeping here a little bit. AppLovin is still the only one that's volatile here, even though they all are listed to go at 5 minutes after 4. Don't know if this is just a delayed reaction for the others or if they've not reported yet. Usually the companies are usually right on time. So I'm going to pause the video here and give it a few moments and come back. All right, so we've got a little bit of movement on Robinhood. Robinhood looks like it's going down, so this is a perfect example on why I like to sell half of my shares if I'm able to, or at least place sell orders at a minimum in case price spikes up. Looks like Robinhood is going down. Maybe it's people taking profits. I don't see any update on their actual earnings. Nothing has come through yet. So I'm waiting on that information. ARM spiked up, but it's going down. App had a huge spike up, but it's kind of leveling off. So App is a huge spike up, but it's leveling off a little bit. And ARM, fortunately, it did spike up and it hit some our sell order, or my sell order. So that's roughly $170 back into my day trading funds, or portfolio balance, account balance. So for now, this is what it might look like when a company has positive earnings. There might be some volatility, but at some point it starts to level off and then typically go into a specific direction. This is what it looks like if it's a bad earnings. This, can't tell if it's a good earnings or a bad earnings. At any rate, we are about an hour and 15 minutes in. If you're here, then you are serious about improving your skills and looking for some possible copy trades, or at least some pointers or tips on what might be some good stocks to look at. So that's all I wanted to show you, was the volatility. Don't know what's going on with CRISPR, McKesson, and Joby. Maybe they haven't released for whatever reason, but you got an idea of the volatility of the moves at earnings. All right, just wanted to show you a little bit more volatility. We got CRISPR Therapeutics moving up. We've got ARM. They seem to be moving up. AppLovin might have stabled off. Don't know what's going on with Hood. Hood actually had some pretty good earnings. They all actually had, I don't know about Joby. So McKesson had some great earnings. Now, one of the things that I do when we have really good earnings is if it spikes up and it goes up, I will place, when I sell out, I will place a order to buy back in, but I drop the order down basically where the close of the day, or a little bit higher, just in case it drops down in price. Now, twice it's dropped down, but it moved so rapidly, it just spiked down and went back up. And both of these were there to hit my buy trigger, but it didn't. And I also, for McKesson, I did the same thing for McKesson. So it spiked up, it was going up, and I put a sell order or buy order in for McKesson right here at 850. So I now have 4 full shares of McKesson, and I'm waiting to see what happens with ARM. And if these two go later today, then I will have spent all of the available funds for my stocks, and I'll be, again, fully invested. And that's important, at least to me anyways, because I do day trade. As long as I day trade, that's when I can start using margin in a positive way and not a negative way. All right, now that I am done with all of the purchases, all of the sells, all of the sell orders, I'll show you all of the actions that I did for the day. My sell list, I sold CrowdStrike, Cisco, Dell, General Electric, Intel, Lam Research, Monolithic Power, Micron, Palo Alto, McKesson Group, and NRG. I placed sell orders on Palantir, Aristanet, and ConocoPhillips. I removed sell orders on AppLovin, ARM, CRISPR Technologies, Robinhood, Joby, BDX, Celsius, ConocoPhillips, Datadog, Tapestry, Vistra, and Walker Dunlap. And I ended up buying, at the end of the day, Leidos, John Deere, Eaton, EQT, Innova, Ross Stores, and NBIX. Now, if you're a new trader and you don't have a great deal of money, I know you can't purchase all of these. I show you everything that I do just so you can take that as data and information and put that into your decision-making matrix for you might want to consider after you do research about either selling some of these if you already own some or one, or buying some of similar stocks that I bought today. None of this should be taken as any type of recommendation. But if you are new and you don't have a great deal of money, if we take a look, maybe you can't afford John Deere at $473, but maybe you have enough money to buy EQT. Again, do some research, look at some charts, look into what EQT does, and mull that information over, and maybe you might decide to purchase one share of EQT if all you have is $60. Again, not a recommendation, just showing you an example that of the various price points of the stocks that I sell, and the same thing in reference to the stocks that I sell and the stocks that I buy. And I show you all of my actions in reference to the sell order on or the sell order off, because some viewers may actually be copying my trades. They may be copying my actions. And for those that are doing that, then I'm showing you everything that I do. I'm going to go ahead and walk out the S&P 500. We are a little bit down from where we started the video in reference to our big green candle. Ultimately, though, S&P 500 closed higher than yesterday's open. That in itself is somewhat bullish, even though we have somewhat of a bearish candle given the length of this wick on the top. And only time will tell on who wins out, the bulls or the bears. So now I want to go to my our chart of the day. It's Unity Software. If we come out to our time frame, nope, not time frame, 1 day, 1 minute. Now I come to the time frame and we go up to the 2-minute chart because I day trade on the 2-minute chart. And we expand out. So from the close of Tuesday afternoon to the close of today, Unity Software went up a little bit over 18%. They did have a little bit of increase from the close of yesterday to this morning, and after they had their earnings reports, you can see that's when they took off. So if I zoom in here from the time that they actually took off after earnings, they jumped up almost $4 in the first 2 minutes, and from there it was just a ride all the way up until the open session today. I was able to take advantage and made a couple day trades before the morning session actually started. And by the end of the day, Unity Software basically closed at roughly where they opened for the day. It was really the big gain here, first thing in the morning right after earnings. But if you don't have Unity Software, you might want to go ahead and take a look. Let's pull back into our 3-minute and 1 day chart. You can see that they had a nice run from August 12th up until up for a month and let's just say almost 6 weeks to September 22nd. Then they've been down for a while, and they just recently crossed back over the slow moving average, and then they had a wonderful earnings report. So Unity Software might be something you might want to consider purchasing at this point in time. Again, not a recommendation, just showing you how I trade using a 10 and 20 day moving average crossover, and also using a swing trading strategy within my long-term holdings. It's now time to show you my realized gains for the day and the portfolio performance as of yesterday afternoon. All right, for today, I have a total gain of $482.28, where almost a little bit more than half of that is $215 from swing trading. A little bit less than half, not more than half. I was looking at my total losses, which are not technically my total losses. This is strictly an accounting difference between the way Charles Schwab accounts for my sales and I account for my sales. Charles Schwab is last in, first out, so no matter what I sell my stock at, the very last purchase is the one that gets identified as what's being sold. For me, I do not sell stocks at a loss. I sell stocks at a profit. So whenever I make a sale, I'm selling at a price that's higher than the shares that I purchased. Anything higher gets a sell order, as you saw in the video. So again, this is just an accounting difference. $215 is from my swing trading strategy. The rest is from my day trading strategy. I had 82 trades today, and my cost basis was $38,000. And this is where I use the margin. If I stay fully invested and through my day trading or swing trading strategy, I make a sale then I don't have any settled funds to actually use. So I use my margin to make purchases using unsettled funds. So I basically borrowed $38,000 to buy stocks after I sold stocks. Now, the portfolio performance, since I opened this account on August 19th, I'm performing at 6.66% compared to the SP 500 at 5.86%. And you notice yesterday that big drop, that takes me down a little bit more rapidly than the S&P 500. And that's because I have higher concentrations of stocks or shares within some companies than the S&P 500. And when those companies go down, it takes me down quite rapidly. But it is the opposite on the upside of the moves. Now, the original account where all these funds are transferred from here into the new account, I stopped trading in here on August 18th. The account was performing at 16.26% compared to the S&P 500 at 10.54%. And we combine the two, my performance is sitting at 22.92% year to date compared to the S&P 500 at 16.4%, making a 6.52% difference. Better performance of my portfolio over the S&P 500. And if you made it to the end of this video, you are definitely dedicated to learning how to improve your investing or trading strategies. You made it through a slightly bit of rambling. You made it through a little bit of education. You made it through the sales. You made it through the earnings. And I truly, truly, truly do hope that you've gotten something out of it. And if so, I look forward to giving you some more tips and aids tomorrow and on into next week. And while I'm doing all that, I look forward to improving my ability to educate and inform with a little bit more clarity. And hopefully my ability to entertain with maybe some jokes and wit interspersed. But I do thank you. I thank you very much. Please click that like, share, and subscribe button, and please share this with any of your family and friends and coworkers who do not have any type of retirement account, or to people who might have a retirement account or they're trading and they're just not successful. And with that, I hope you have an absolutely amazing rest of your day.